Welcome, everybody. I'm excited to have Grant Goad again from Statewide Mortgage. Hello,
Hello.
here to talk all things real estate. So,
Yeah.
today we're going to talk about, I like to compare it to the Wizard of Oz. So, the Wizard of Oz, he's behind the curtain, and you don't know who this person really is in the transaction because as a buyer, you don't get to talk to this person, but we always use the word, who are these people that we're talking about? So today's video or podcast, we're going to talk about the good old underwriter and
Yeah.
how they fit into our puzzle and why they hide behind that magic curtain and why you as a buyer can't talk to these people.
Yeah.
So excited to talk about this, to put some explanation into it. So, who is, in a nutshell, who is an underwriter in the loan process, in your, at least in your world?
Yeah, sure. No, I think it's a great question because we talk about it a lot when we're communicating with clients. We talk about, okay, we'll send your loan into underwriting. Okay, the underwriter requested for this. So I think you're right. There's often a veil over it. And I think a problem with that is could be on loan officers because the truth is underwriters are not as mysterious and scary as a lot of times people think. They often think of underwriter as the one, making a judgment call on them or judging them too hard. That's really not what they're doing. They want your loan to close too, just like we want your loan to close. And they're not here to make your life miserable.
I
Typically
think most people think that they're to make our life
I
miserable,
know.
right?
That's the perception, right? But really, an underwriter's job is to hold lenders, their companies that they work for, accountable to government mortgage guidelines, right? It's their job to do that. They're the ones that know all of the government guidelines. And as scary as some government guidelines are, the grand scheme of things, it is for our benefit. It's for every buyer's benefit. It's for every seller's benefit. It makes our market healthy, right? We saw what happened in the early 2000s when underwriting was lax and there wasn't much underwriting happening. It was more of a trust system, and we all know how that goes when there's nothing on paper. So, grand scheme of thing, high level, underwriters are good. They're not so scary, and they can act absolutely be communicated with, not usually by the buyer, right? Whoever's getting approved for the loan. We don't really want communication there. Number one, it just bogs underwriters down. And two, you want to keep a layer between the transactions so there's no, funny business that goes on behind that, anything like that. But we communicate with underwriters. I do every day. The underwriters that we work with and work for the investors we use to close loans, they like talking to us, and it's okay because a lot of the issues that pop up are solvable when you just talk about it, or when a loan officer sends in a letter that explains something that's a little bit odd on a file. And it typically has a solution. You just got to talk about it. So number one, underwriters are they are the gatekeeper, right? They're going to approve your loan. They're going to say, yes, all the information that you submitted on your application meets the mortgage guidelines for this specific property that you're purchasing. I've verified your income. I've verified the money you have in the bank, and I've looked at your credit report to make sure there's nothing there that is, derogatory. So, they're the ones that are actually going through the guidelines. Um, and we're doing that up front, right? As loan officers, that's really our job is to be the first filter, right? It's our job to know the guidelines, just like an underwriter's job. And so we work together with underwriting. Once the loan is actually submitted, our whole team will work with that underwriter to make sure everything we've submitted fits into the bucket that we're submitting it into, which loan program. So, not as scary as that seem. They do, they are absolutely essential in the modern loan process. That's how we have to do things if we want to close loans using government-backed mortgages. Now, there's other financial institutions out there that can give loans that don't require traditional mortgage underwriting. But for what we offer here at Statewide and for what most lenders do, that you will work with are those government-backed agencies like Fannie Mae, Freddie Mac, FHA loans, VA loans, USD loans. All of these acronyms are all backed by government agencies, which require following government mortgage guidelines. So, all that to say, underwriters are not as scary, and they're just people, right? They're just people like us. So they have a voice, they have a name, and they answer their call, like the investors that we work with, which we appreciate that. Some I know I've worked with some companies in the past that underwriters didn't really want to talk to loan officers, right? They wanted to keep the barrier there too. And I don't think that's a sufficient or a efficient way to do business, in my opinion. So I like having the communication. As long as you have reasonable conversation, you're not trying to be pushy, you're not trying to be arrogant with things. Because, like I said, most things can be explained and worked on. So,
So Statewide is a direct lender. And so who do these people work for? Do they work for Statewide? Like
Mhm.
where
So
do
we, so yeah,
who do
so
they
that's a
belong
great,
to?
yeah, no, that's a great point. So we actually have the opportunity to use many, many different underwriters. So we have work a correspondent lender. So we get to work with multiple investors and use their underwriting teams. Now, typically, we know who the underwriter is when we're sending a loan to a certain investor. We build a relationship. We send loans to certain investors, so we tend to build a relationship with certain underwriters. So we try to build that, and so we know who to talk to and who to go to, and that's what I like about it. But they're on our team, right? They are a different investor, but they're on our team. So it's Statewide's money at the end of the day that we're loaning out at the end of the transaction, but we're using an underwriter from an investor that's eventually going to purchase this loan from Statewide. So, in a nutshell, that's the summary of how we operate. Um, but all in all, we're on the same team. Like we're all working together for the same goal because the only way that, mortgage companies can survive is if they close loans. So that's our goal is to submit loans that are good, that are beneficial to the buyer, will help the seller close on this loan, close on the sale of their home, and ultimately promote a healthy housing market, right? That's our goal. We want to make sure that every loan we send in to these different investors, to the underwriters, they're loans that can be repaid. Because that's what we're verifying. We're verifying that this person who wants to take out this loan can actually pay it back. And that's why the guidelines exist.
Yeah, for sure. Because we don't need what happened in '08 to happen
Correct.
ever again.
Correct.
So you made me start thinking about something. So for people who are listening or watching, we also have what we call brokers.
Mhm.
So a lender could be a broker as well. And so please correct me if I say something incorrect, Grant, but I'm going to lead down to the question I have is so when you're a broker, you outsource. Um, Different institutions to find, I guess, the best fit for the buyer.
Sure.
And then within that, if I'm correct or incorrect, that underwriter goes with that bank. Is that how that would work if you
Yeah,
were
it's similar
working
to
with a broker?
yeah, it's similar to our model as far as the investor that we choose, right, who's eventually going to purchase this loan from Statewide. Similar to a broker model. The main difference is at the end of the transaction and kind of during the transaction, who is working on the loan. That's really the main difference between a broker, and obviously there's compensation factors that are different with broker and correspondent lenders. But really, at the end of the transaction, it is Statewide Mortgage's money that is being sent to title. So that's the main difference between an actual broker who is brokering out the entire transaction from start to finish once they get it submitted. And then at closing, that investor who the broker is using will actually fund the loan and then it will get purchased after the fact. So not a lot of huge differences. I like the correspondent model because we have our own processing team that helps us with the transaction from start to finish. And then obviously at the end, like I mentioned, our closing team, our docs team draws all the docs. It's not a different lender drawing all of our final documents that are going to be signed at closing. It's Statewide Mortgage. So I love having that in our back pocket. It helps with speed and efficiency at the end of transaction and the beginning, honestly, to just really have a feel on where exactly your loan is. So,
Yeah, because in the 12 years I've been doing real estate, all but one of the lenders that my buyers have chosen that have then gone through being through a broker rather than a direct lender. All but one have not closed on time.
Really?
There
Wow.
was always a delay. And my experience is that communication layer is like severed, or I don't know if it happened to be with that broker
Could
indirectly
be.
or
Yeah.
just a coincidence or whatever. But that's why I love working with you because of the fact that that communication, that speed,
Hmm.
um, the transparency is there. It just makes the process that could be stressful for somebody already, it just, if you can just give some kind of something of
Something. Yeah. Give me
information,
something to digest.
yeah, so that
Yeah.
that calms the buyer, or
Yeah.
even maybe it's the listing agent's seller wanting information about how the transaction's going.
Hmm.
What a difference that makes throughout the process to say, hey, just so you know, they're needing X, Y, and Z. Oh, okay, okay. But
Yep.
not answering the phone, not answering an email, like all that does is just stir up things for the people in the transaction to
Mhm.
like, oh, well, this transaction must not going to close, or we have a
Exactly.
delay, or
That's it
it
right
just
there.
like gets the brain working
Yeah.
in a
Yeah.
negative way.
The unknown is usually the worst
Mhm.
offender for stress, right?
Yeah,
The stress
yeah.
of the unknown. So, and I harp on that a lot. It doesn't really, this may kind of be a tangent from our underwriting conversation, but just communication across the board should be open with all parties in a transaction. I don't know if this is I think it's a good trend that we're seeing. When I first started in the industry, it was like, you could not talk to the seller side. Like we will communicate through our agents and all agents alone, and don't talk to the seller, and don't share this, and I get it. Sometimes we do want to keep things separate. We don't want to divulge everything if it's not necessary or not helpful to the situation. But explaining that, hey, there's an issue, and here's our path to fix the issue. We're making you aware of this, not to back out of the deal, but to just say, hey, we're working on a solution, and here's what we need from you that actually could help us solve this problem. Because sometimes it's an issue with the property that the seller can help us with, or the listing agent can help us with. When you're communicating with them, maybe they told me something. So, open communication lines just make the process so much smoother. So, I always welcome conversations. I try to reach out to every listing agent on our transactions that if I'm, representing your buyer, I'm making a phone call to the listing agent, giving her my cell phone and saying, call me. You want to know when the
Yeah,
appraisal is going to be ordered? Ask me. Like
yeah.
it's open information. So, just communicate. That's solve a lot of those issues. And, back to underwriting, communicating with our underwriter is a big thing for our team. So having a direct email messenger to underwriters is really helpful. And I appreciate underwriters that are willing to do that.
Mhm.
Um, Obviously, our industry went through a season where, rates were super low. And so underwriters were not very talkative during that season because
Yes.
they were overworked, right? They were working on refinances from like sun up to sundown and then past that all night long, which is great for the mortgage industry. But, I think that kind of hurt the communication at that point. But we're back to a more stable, more normal, in my opinion, market to where people aren't just completely jam-packed and overworked at a
Yeah.
time. So I think it's a healthier version of the market, to be honest.
Yeah. So, two other things that I want to talk about.
Mhm.
So, the first one is, let's just say we've got a buyer whose numbers are tight. Like we have to make sure we dot our I's, cross our T's because very there's no room for error,
Yeah,
right? So going back to the underwriter, let's say we're past the appraisal, that checked the box, we're all good there. But then suddenly, maybe that buyer has to come up with a little bit more funds for
yeah,
closing than we anticipated for whatever reason. Maybe
sure.
their hours got cut, or
Yeah,
maybe unfortunately their boss came and said, we're cutting your pay, or whatever
right.
that might be for that buyer. It's just, life happens. Didn't know this was going to happen, but now you've got to come up with X amount of dollars more, and that underwriter comes behind the magic curtain and says, okay, more funds are needed. And that buyer looks at me and looks at you and says, I don't have that money. So we or you get creative and say, hey, can you get a gift? Let's just say the number's $3,000. Can you get a gift of $3,000? What does that then look like in terms of transparency, where the money's coming from, and
Mhm.
what you have to do to be able to give it to that underwriter so that
Sure.
that underwriter can check all the boxes and give the magic words of clear to close?
Yeah, that's a great question. So really, when it comes to gifts, like if we're trying, let's just use that as an example of finding more funds, right? When I say finding, I just mean using more funds. There's two ways to go about it, right? Sometimes gifts are sent before closing. So mom or dad gives you $10,000 for this transaction and they send it to your bank. So if that happens, then we will need to document the paper trail. We will have to document the deposit into the account. And then depending on the loan program, we'll have to document where it's coming from. So mom and dad's bank account to make sure that that is legitimate funds that are being used. Other certain programs we typically recommend for most loan programs is the gift to be wired directly to the title company at closing. That is usually our go-to as far as mortgage underwriting guidelines are concerned, the easiest, least path of least resistance, right? Less documentation. That way, once we get to closing, or once we get back to underwriting, the underwriter will see, okay, they're going to get a gift at closing, and it's going to do this XYZ. They can put that in the file, run their findings, underwrite the loan with that gift, the additional assets, and then at closing, the gift donor will be wiring those funds directly to the title company, along with our buyer's funds directly to the title company. So, and then title does their magic. They balance everything with our closing teams and make sure all the final numbers are balanced. So, yeah, that's a great tool to have. It's a question we usually ask up front. It's like, hey, do you have any availability to get a gift? Do you have anyone willing to give you a gift? We've been seeing a lot more gifts lately because, times are a little bit harder. People are stressed financially a little bit. Down payments are higher because of purchase prices where they are right now. So we have been seeing a lot of gifts. And so this is a very useful tool that buyers, hopefully have the opportunity and are blessed with the opportunity of having people that will give them gifts for this because not everybody does.
Hey, I
But it's
love gifts.
yeah, I
Anybody
know,
want
I
to
know.
gives me money,
That's
I'll take
right.
it.
Yeah, don't
Thanks.
say no to it. So it's absolutely okay. Gifts are a part of the mortgage transaction. Every single transaction, it has the ability to get those gifts unless you're doing some type of investment loan, right, where you're buying an investment property. Then we've got a little bit different of issues to work on, right? But if it's a primary purchase, especially first-time home buyers, repeat buyers buying a primary home that they're going to live in, gifts are always welcome. So.
So what's the magic number of how many gifts because like I said, I love gifts. Money can
Yeah, there's not
how
really
many
a
gifts can I have for one transaction?
Yeah, I mean, I don't know about the different amount of gifts. They just have to come from people that can actually give you gifts. It can't just be
Okay.
a random person on the side of the road that says, I'm going to give you 10 grand. That would be amazing if that happened. No, it's got to come from someone in your circle, right? Your family,
Yeah.
relative, someone that and have a relationship with. So, um, as far as
Okay,
that,
so let's talk about the front side,
yeah.
right? So that was the back side of the transaction. Let's talk about the front side of the transaction. Let's just say it's the same buyer. Numbers are tight. We've got to
Mhm.
make sure we have everything we need, because we don't want to get 10, 15 days in the transaction and then you come to us and say, you know what, I thought I could get this done and I really can't.
Right.
But there's a great thing that can happen is everything that you know about this buyer can go through the underwriter. um, when can that
Oh,
go
yeah,
to
right.
the
Yeah,
underwriter?
so one thing we offer here at Statewide is what's called TBD underwriting to be determined. And all that means is we have the option to send your loan through underwriting before you go to contract. So before you sign any documents, before you put any earnest money deposit down, before you pay for inspections, all those things that are upfront costs, um, we have the option to run your loan through an underwriter, those people that are behind the veils, a human being not just a filter like me, the loan officer, but an actual underwriter, and they will review your income, your assets, your credit, the very important pieces, everything except the property, because we don't have one yet. They won't review the property or insurance. Um, they'll review all that up front, and we can get a initial approval subject to finding a property. So that is a great tool for those that are in those tight buckets, right?
I
For those
love
that,
it. I
yeah,
absolutely
it's
love that.
amazing. It's really popular with our self-employed customers. So we don't discourage self-employed people to get loans, right? That it's totally fine. We love self-employed clients. However, reported income is a huge spectrum of how people report income on tax returns. And so we have to use a set standard of guidelines for self-employed clients, right? So we need to see those tax returns, and it helps to have those tax returns reviewed by an underwriter before you even go to contract. So I highly recommend it for our self-employed folks or those that are really, really tight on their budget. It's good to just have a second set of eyes, an underwriter's eyes on their income, because that's usually what varies. Credit, we'll see up front. We might have a question, or we might try to do some repairs or adjustments to their credit, buying credit cards down or opening up cards. For the most part, though, we can kind of get a feel for credit, but it's the income piece that sometimes it's interpretation, right? Sometimes it's maybe I interpreted how they're paid that maybe the underwriter disagrees with. And so it's good to work on that up front and come to an agreement and figure it out before, you get all these upfront fees going. So
Well,
we
I
love
love it
doing
from the standpoint of being able to talk to that listing agent to say,
absolutely.
hey, just so you know, and kind of behind the scenes, a negotiation tactic
Mhm.
to get more off the sales
Absolutely.
price, to be able to say,
Yeah.
hey, we're putting in this offer just so you know, Mr. or Mrs. Listing Agent, my buyer's already gone through the
Yep.
initial underwriter.
Initial
So we're
underwriting.
kind of a couple of steps ahead of the game. This is a serious buyer. And that
Absolutely.
speaks volumes to
It
that
does.
listing agent, not even necessarily in a multiple offer situation, but just in a regular
Yeah.
situation of
Just for confidence.
presenting yeah, it's like, okay. And then they can repeat that information to the seller so that if they are on the fence of maybe my buyer tried to negotiate a little bit more than what we thought we'd be able to get through to say, okay, let's just do this,
Let's just do it. Yeah.
you know.
No,
So,
that's a great point. And especially when we were in the season, like I was talking about earlier, that was very competitive, right? When rates were super low and people were lining up at open houses. You know what I mean? You remember those few years. It was really helpful then, especially then to kind of distinguish your offer from others, to have that approval actually saying, oh no, this is not just a pre-approval letter. This is an underwriter has reviewed this file approval
mhm.
letter. Um, it's very helpful. It just helps everybody in the situation, including us. Like this is something we don't charge for it, right? So it is, it's an extra thing we do to take it one step further, but we still don't charge for it, right? It's still nothing to us until this loan closes. However, it does benefit us because it gives us the peace of mind as well, knowing, okay, yeah, everything we talked about up front, an underwriter has approved it all, we're good to go on this guideline and we can have full confidence, coaching a client, realtors through the whole process through the end. So we love it too. I think it benefits everybody.
Yeah, the one thing that I could say about Grant is he can be very creative. So during that process, that initial process of going to writing ahead of time, if we need to be creative in
Yeah, you
some
can pivot.
regards, that's the time to be creative
Hmm.
because we're not following the guidelines of the contract where we've got to
Right.
close in 30 days or we got to give loan approval in a certain amount of time. We have the freedom, if you will, to allow Grant to be creative, to come up with, a situation.
Yeah, for sure.
That's when that is super, super helpful to
Absolutely.
have, as I like to say, my ducks in a row
Yeah.
before we go under contract and don't have those guidelines to the contract that we have to follow. So, whether it be Grant or another lender,
Yeah.
make sure when you
Ask about
hire
it.
your lender
Yeah, ask
that,
about it.
yeah,
It's
that
not something that is unique to statewide. I'll just say that up front. It's, a lot of lenders are offering it, and I take advantage of it, right? Ask your loan officer that question. Hey, could we go ahead and send this loan through your underwriting team before we go to contract? I'm pretty nervous about, my how I report my income on my taxes. So, um, not every lender will do it, but a lot will. So it's always good to ask if that's something that you think will be beneficial for your offer, especially it depends on your market, right? Or where you're trying to put an offer in. Maybe it's a really, really competitive neighborhood that you're wanting to spend an offer in on, and that could set you apart. So,
yeah.
you know, definitely ask.
Well, we just solved the world's problem by
Everything.
notifying everybody that an underwriter is a real person
Yeah.
and it's
If an
not some
underwriter watches this, I want a phone call saying, thank you. I'm not scary. Appreciate you.
that, some underwriters, not some super scary person or AI generated person.
Right. Yeah.
They're actually real people who do sit. But we're able, me as a realtor, I don't really communicate that much with
No.
the
Mm-mm.
underwriter. Doesn't say I haven't, but a lot of times I don't need to,
You don't need to. Yeah.
especially when you've got a good lender like Grant who communicates so well. I really don't have a need to
Right.
talk with them. So that speaks volumes of the work that you do to help
Thank you.
customers. Because, like you said, we're all in it together. We all want to we have the same goal in
We got the
mind.
same
We're
goal. We got
all
to
wanting to
close
get
it.
to the closing table
Yep.
to help the seller get where they need to and the buyer to get their dream home that they want. So I thank you
Thank you,
for
Christy.
your time as always. And appreciate you, Grant Goad, Statewide Mortgage. If you need anything from him, he's going to be down below some contact information. Reach out to him. He's got a super easy process to get it started.
Yep.
All you got to do is push a button, and
Yeah.
it
Give
makes
me a
it
call.
that simple. So, folks, until next time.
Yep.
Thanks, Grant. Have a great day.